Good evening, good afternoon, traders. This is Sage FT from the Live Trading Desk. We're going to give you another Sunday night review and Rev-Up. I hope everybody's having a wonderful weekend. Happy Labor Day tomorrow. Don't bother coming in tomorrow. It's going to be a day off. We'll go ahead and kick butt on Tuesday. Let's go ahead and take a look at the week that was. Let's use the 4-hour chart. It's a little hard to see in the daily. If we take a look here, we've got nothing but chop sideways. Now, I don't want to regurgitate what Mancini said, so I'm going to be very, very quick. This is not going to take a long time. One thing I want to point out is we are just coral snaking on our 4-hour time frame. Sideways, back and forth. Now, you're really going to be able to see what happened on the last week, over the last week's price action here on the 15-minute chart. If you take a look, what they're doing is they're looking for liquidity. They're looking for liquidity. Now, if we zoom back out to the daily chart, we can see that we're in first position very nicely to the upside. So what could happen is next week you get a push higher. Let's go back into this week. Look at how they're, every time it gets a higher high, a lower low, they absolutely exhaust it. This was for the records here. This was absolutely amazing. Just reversal, 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 reversal. This one was significant on Friday. They were supposed to give up the ghost here. Let's take a look. All right, so if we look at the low here, they pierce it and then they slap right through. All right, so now look, find the high, pierce it, bring it back in, find the low, pierce it, bring it back in. So if we zoom out, we can see that this is all they did all week long. Here's the deal. Everybody waiting for the next big move is how liquidity continues to grow and get siphoned at each point. Okay, we have to remind ourselves the market moves between pockets of liquidity. That's it. That's what we have to know. So if you take a casserole pan, put a little bit of water in the bottom of it, kind of go like this, you're going to see how the liquidity goes thin and then thick again. Thin and then thick again, thin and then thick again. That's the easiest way to look at liquidity. So what we're waiting for, let's move into next week, because there really was no rhyme or reason. I would love to tell you, well, we moved into brand new all-time highs, or we really broke down. But if we think about what could happen next week, we got to zoom in on this, right? Because this is kind of a big deal. I don't want to reiterate all the other things you've heard on the internet, okay? What I want to tell you is this was a perfect trap. This was the absolute perfect trap for the longs to push, right? Because we were inside of this balance. And so what people were waiting for was the next big breakdown, the next big breakout. Now, here's why we weren't bearish on the breakdown on the move. Because we're inside position 1 on the daily chart. And so what we're looking for is exactly what happened. They removed the liquidity that was waiting down here, right? We had a bunch of sell stops right into the liquidity that was removed for it to be pushed higher. Liquidity means there was buyers sitting here waiting for this drop to actually happen. All right, so what are we looking for next week? What we want to wait for is, it might take until Friday, right? Because what I want to do is I want to start out with clicking the right button. Okay, what we have next week is Monday, United States bank holiday. The S&P 500 E-mini futures will be running on the CME Globex exchange, but the stock market will not be open. The banks will not be open to back up the liquidity. And so here's what I think could happen on Monday, Sunday night to Monday while the markets are closed. They could pick a direction. Low volume, perfect time to move it. But what we're waiting for, and this is going to be the catalyst, it's going to shift to all of this job data over the next week. Because what's going to happen is everybody's waiting on the Fed to figure out if the unemployment is starting to tick up and is going to be a problem. Now, I am a firm believer that if the lower interest rates, the stock market will collapse. I truly believe this is what your grocery bill looks like. So why would it stop right here because someone on Twitter says that it should? It won't, and it doesn't. Looks pretty cool in here, huh? You guys get the sneak peek. That's going to do it for this week's Sunday night review and Rev-Up. I hope everybody has a wonderful evening. When you see Seth in the room, tell him thank you. All right, everybody, that's going to do it. I'll see you Tuesday morning, not Monday. Thank you. Good night.